Picture Doha's busy streets, bustling with life and energy, a true reflection of the city's vibrant culture. Here, Snunu's delivery riders zip through traffic, a symbol of Qatar's convenience culture and the fast-paced lifestyle of its residents. But in July 20,000, everything changed dramatically. Saudi delivery giant Jahez acquired a majority stake in Snunu for a staggering $245 million, shaking up the industry. This wasn't just a business deal, it marked a new era of Gulf cooperation, ending years of rivalry and signaling a significant shift toward regional integration and unity. The deal shows Gulf nations are now investing in each other, building economic strength from within instead of relying on the West, fostering a sense of regional solidarity. It's a strategic pivot. Regional champions are being created to compete on a global scale, with Gulf capitals staying in the region to fuel local growth. The Jahez-Snunu merger is a microcosm of a changing world order, neighbors prioritizing shared futures over old disputes, fostering a new era of collaboration. This consolidation is a direct response to global uncertainty, as Gulf states seek new alliances, and greater independence from traditional power structures. As we'll see, this is just one move in a much larger strategy to diversify, reduce dependencies, and chart a new course in a multipolar world, ensuring a resilient future. So, where are Gulf nations turning? Increasingly, toward BRICS, a bloc that now includes Saudi Arabia and the UAE. BRICS offers an alternative to Western-dominated institutions, and its expansion has made it a major global force. For the Gulf, BRICS means access to vast new markets, long-term energy customers, and investment partners outside the West. It's also about political autonomy. Gulf states want to make decisions based on their own interests, not Washington's. By deepening ties with China, India, and others, they're pursuing a more balanced foreign policy. BRICS's financial institutions, like the New Development Bank, provide funding with fewer strings attached, supporting Gulf mega-projects. This financial independence is key to building a resilient, self-reliant future. The Gulf's pivot to BRICS is about securing prosperity on their own terms. The Gulf's pivot to BRICS accelerated in 2025 after a shock from Washington, which sent ripples through the global economy. The Trump administration imposed sweeping tariffs, even on close Middle Eastern allies, disrupting decades of open trade and cooperation. For Gulf leaders, trying to diversify beyond oil, these tariffs felt like a betrayal and made the U.S. seem unreliable, shaking their confidence. New trade barriers threatened emerging Gulf industries, from aluminum to automotive parts, and forced them to seek new markets to survive. The fallout was immediate. Gulf and North African exports to the U.S. became less competitive, while BRICS markets looked more attractive and viable. The tariffs were a wake-up call, exposing the risks of overdependence on a single superpower and prompting a strategic reassessment. This validated the Gulf's strategy of diversification and regional integration, reinforcing their resolve to build a more resilient economy. Strengthening ties with BRICS and building regional trade blocs became urgent priorities, essential for future stability and growth. Ironically, U.S. protectionism pushed its allies to accelerate the very power shift it hoped to prevent, altering global alliances. The Gulf's search for new partners is now reshaping the global economic landscape, creating new opportunities and challenges. At the heart of this global financial shift is De-Dollarization, an ambitious effort to reduce reliance on the US dollar for international trade and finance. This movement is gaining momentum as countries seek to diversify their economic partnerships and protect themselves from external shocks. For decades, the dollar's dominance gave the US immense power over the world economy, but it also left Gulf nations exposed to the risks of US policy changes and the threat of sanctions. This dependency has shaped the region's economic strategies for generations. By trading in other currencies, like the Chinese yuan or Indian rupee, Gulf states are taking steps to gain more control over their economic destiny, reducing their vulnerability to external pressures and increasing their negotiating power on the world stage. This isn't just theory. Oil sales to China are now increasingly settled in yuan, marking a significant departure from the traditional dollar-based system and signaling a new era in global energy trade. Meanwhile, India has begun paying for its energy imports in rupees, further accelerating the trend toward currency diversification and strengthening regional economic ties. At the 2025 BRICS Summit, a landmark $100 billion development fund was launched between Abu Dhabi and Brazil, operating entirely outside the dollar system. a bold step toward financial independence and South-South cooperation. These moves are foundational steps toward building a parallel financial universe where multiple currencies can coexist and compete, reshaping the global economic order. The implications are huge. Less global demand for the dollar could raise U.S. borrowing costs, impact American influence, and force a rethink of long-standing financial norms. Over time, this could erode the economic privilege the U.S. has enjoyed for decades, changing the balance of power in international finance. For the Gulf, it means greater sovereignty, more flexibility in policy decisions, and stronger ties with fast-growing Eastern economies that are eager for new partnerships. De-dollarization isn't about destroying the dollar overnight. It's about building a more balanced, multi-currency world where no single nation holds all the cards. The Gulf is leading this shift, creating new pathways for trade, investment, and innovation that could redefine the region's future. The era of dollar dominance is being quietly, but steadily, challenged, ushering in a new chapter for global finance. De-dollarization is being cemented by real deals that bypass the US dollar and deepen South-South cooperation. Gulf capital is now funding projects across BRICS, building a web of interdependence outside Western finance. In energy, Saudi Arabia and the UAE are signing long-term supply agreements with China and India in local currencies. This reduces global demand for dollars and strengthens bilateral ties. Gulf investment funds are also backing major infrastructure projects in BRICS countries, like the $100 Mas on near Bindaber Dap in Mai, Berdabilior, Abu Dhabi Brazil Fund. Even regional deals like Jahez Snunu reflect a mindset of building strength from within. New private equity and venture capital funds are fueling a Gulf-centered economic geography. The Gulf is becoming a central hub in a new global economic network. As the Gulf rewires its alliances, it's also embracing digital assets as part of its diversification strategy. Sovereign wealth funds and companies are investing in Bitcoin and crypto to hedge against fiat currency volatility. The UAE's Mubadala, for example, now holds over $400 million in BlackRock's Bitcoin ETF. Bahrain's Al Abraj Restaurants Group became the first regional public company to add Bitcoin to its balance sheet. This isn't just about hedging, it's about positioning the Gulf as a global fintech hub. By fostering crypto-friendly regulations, the UAE and others are attracting talent and capital. Investing in digital infrastructure ensures the Gulf is not just a user, but a builder of the future digital economy. Even a small allocation of Gulf wealth to crypto is reshaping the global financial landscape. The US hasn't stood by as the Gulf pivots away. In May 2025, Washington struck back with over $1 trillion in tech and defense deals with Saudi Arabia, the UAE, and Qatar. The catch? All transactions must use the US dollar, aiming to halt de-dollarization in the region's future industries. The US also lifted export controls, giving Gulf states access to advanced AI chips and tech. A flagship project, a massive AI campus in Abu Dhabi, powered by US technology, but under American oversight. The Gulf now faces a crossroads, unparalleled access to tech and security, but at the cost of renewed dollar dependence. It's a high-stakes negotiation, balancing autonomy with the benefits of US partnership. The Gulf's response will shape the global economic and technological order for years to come. This isn't just a story for politicians and CEOs. The new world order will affect us all. The era of a single superpower is fading, replaced by a multipolar world with shifting alliances. For consumers and businesses, this means new opportunities and new uncertainties, as supply chains and power centers shift. The US and the West must adapt, competing and collaborating with emerging powers as equals. For the Gulf and other rising economies, greater agency and resilience are within reach. Deals like Jahez Snunu show the power of regional talent and capital. The competition between the US and BRICS, with the Gulf as a swing block, will define the 21st century. Understanding these shifts is essential for navigating the complex world ahead.